cyber attacks and everything else.
Right.
But,
Good evening and welcome once again, those of you who joined late to this, or more recently to the 161st monthly meeting of FOSWL. And FOSWL stands for Friends on Same Wavelength. So we have this meeting every month on the third Saturday, same day, every month, third Saturday at 6:15 p.m. while we are doing it on the Zoom platform. We used to meet physically in the pre-COVID days. Excuse me, the phone was ringing. We used to meet physically in a place in Hyderabad, which is known as the Federation of Chambers of Commerce and Industries, FAPSI House, on the same day. And thanks to COVID, we have shifted to this platform as so many other people have done. And ever since, we are continuing on this, and our members feel this is far more convenient. So at least till the COVID threat is completely gone away from the world, we may continue on this platform. So may I now call upon to commence this meeting, Sirisha Bolineni, to read the prayer and kick off this meeting.
Thank you. Thanks for this opportunity. Heaven of freedom, where the mind is without fear and the head is held high, where the knowledge is free, where the world has not been broken up into fragments by narrow domestic walls, where the words come out of the depth of truth, where the tireless striving stretches its arms towards perfection, where the clear stream of reason has not lost its way into the dreary desert sand of dead habit, where the mind is led forward by thee into ever-widening thought and action. Into that heaven of freedom, my Father, let my country awake.
Thank you. Sirisha is an engineer from India. Then she went on to do her MS in the US, and she is now, along with her husband, who's also on the call, Pradeep Chand. She's a manager in Adobe, and they live in San Jose. Thank you for joining us, Sirisha. Every meeting of FOSWL is an endowment lecture in memory of a senior citizen or somebody, a senior citizen's family member. And this one, in the month of May, is especially important for all FOSWL chapters because the May month of FOSWL Hyderabad is an endowment lecture in the name of our co-founder and chief motivator, the visionary, Mr. M.L. Swami, and his wife, Mrs. Rangamani Swami. He, along with a bunch of friends in Cupertino, founded FOSWL. They laid the foundation of FOSWL, Friends on Same Wavelength, about 21 odd years ago. And he was the first engineer-in-chief of the then Andhra Pradesh, and Mr. APV and Sharma, who's on this call, may probably remember him. And he is from that breed of engineers who literally were participants, team members who built India after independence. There were people from that era. And even post-retirement, when he went to settle in the US, he continued to be active. And he passed away a few years ago in his mid-90s. And he and Mrs. Rangamani Swami continue to nurture FOSWL into what it is today. And FOSWL Hyderabad happens to be the first international chapter of FOSWL, which was founded in Cupertino, California. So we'd like to reiterate our love and affection to Mr. M.L. Swami and Mrs. Rangamani Swami, in whose name this endowment lecture is organized in the month of May every year. And each meeting is also supported by a logistic sponsorship. And this month's meeting is supported by our Joint Secretary, Mr. Somasekhar Rao Tipanneni, who is on the call, in memory of his mother. Thank you, Somasekhar Rao. With that, I'd like to now I think some people are still trying to enter Somasekhar Rao. I think Rao Garu from ISB.
Namaskara, Subbarao garu.
Namaskaram Andy. Welcome, Dr. Krishnamurthy.
Yeah, thank you.
May I now call upon
నమస్కారం అండి అందరికీ నమస్కారం సుబ్బారావు గారికి మీకు అందరికీ
Namaskaram Andy. The meeting is on now. We are going ahead with the program. I have muted everybody. May I now call upon Pradeep Chand, our Joint Secretary's son-in-law. He is a graduate from IIT Mumbai in computer science and then went on to do his MS in the US. And he is a manager in Amazon at Sunnyvale. So we're delighted to have you both. And it's only apt that you are introducing Karthik today, who is just a few miles away from you in Palo Alto in Apple. So would you like to introduce Karthik to us now, Pradeep?
Yeah, thank you, Mr. Subbarao garu. Yeah, it's an immense pleasure for me to be on this call in the presence of such eminent folks. It's my pleasure today to introduce the distinguished speaker, Mr. Karthik Hariharan. Karthik did his BTech in engineering from IIT Madras, and then he got his master's in material science from Northwestern University in Illinois, followed by an MBA from the distinguished Kellogg School of Management, also from Northwestern University in Illinois. Mr. Karthik, over the last 3 decades, has his career spanned across technology management, management consulting, and entrepreneurship and healthcare. He's been director at Apple in Silicon Valley since 2016. Prior to that, he was the founder, president, and COO of Glimpse, a startup in the healthcare sector. Apple acquired Glimpse, and since then, Karthik has been serving as a director at Apple. Prior to Apple, Karthik was VP of Applications Product Management at Edge Spring in Silicon Valley, which was focusing on developing cutting-edge analytic applications. Earlier, Karthik also spent time at SAP as their Chief Operating Officer in Palo Alto, California, and as a senior manager at Cisco in their voice technology applications group. Mr. Karthik is a person of varied interests. He enjoys travel, photography, dramatics, and also spends time coaching youth soccer in California. Without further ado, I would like to hand it over to Mr. Karthik to unravel and demystify Bitcoin for all of us. Thank you.
Thank you, Pradeep, for so crisply introducing Karthik. I think Karthik himself wanted it to be very, brief. But he wears his accomplishments very lightly and humbly on his sleeve. But we're delighted to have you talk to us today, Karthik, because apart from politics, I think Bitcoin has quickly come up to be the other mysterious thing, Everybody thinks they know it, but nobody really knows what it is. And every other youngster I met says, Uncle, I made so much money on Bitcoin and I'm going to make some money. And my constant worry is, how much he'll lose for his father, because he's still investing his father's money, not yet his. So Karthik, would you take us through this quagmire of Bitcoin and demystify it for us?
A pleasure. Thank you so much, Subbarao, for inviting me. Namaskar, everybody. Good morning in India. Good evening. Good morning in Sunnyvale. Good evening in India. See, I got it confused early in the morning. Well, pleasure to speak with you all. Thank you for the invitation. FOSWL is an organization near and dear to my heart. I love the mission and the camaraderie and the connection it fosters among senior citizens. And it's an organization especially dear to my father's heart. And I'm delighted he leads the FOSWL Adyar chapter, and I believe is in the call today. So very pleased to be able to share with you a little bit of what I know about Bitcoin. You all are very kind about sharing effusively about my background, but it really is luck, as you would say, that has enabled the career, whatever it is so far. So allow me to share my screen, and hopefully you can all see the slides. And if you can give me a thumbs up, Subbarao, that is visible. Great. Then I will go into.
Yes.
Perfect. So this is a talk that I gave last year to the Adyar chapter of the Rotary Club, or was it the Annanagar chapter? I forget, but Madras chapter of the Rotary Club. And they found it reasonably illuminating. And so I hope it'll have a similar function for all of you today. It is all personal perspectives here. There is no official perspective that I'm sharing from Apple. Some might think this is Apple's perspective in technology and Bitcoin, and I want to disabuse you of that because A, Apple is a famously private company and we don't talk about anything publicly, and B, these are all opinions that I forged on my own personal accord. Like many of you, I am also acutely interested in Bitcoin. I read about it a lot in the newspaper and over the past many years. Like some of you, I'm an investor in Bitcoin myself. And like all of us, I'm wondering, what the heck is this all about? And I don't want to be completely outdated when now youngsters approach me and talk to me about that. So I try to educate myself on this topic through both reading, speaking with people, and also putting my money where my mouth is and investing some money in Bitcoin. And I can talk about that also at the end. But so these are my personal perspectives. No investment advice is given here. So if you want to invest your or your father's money or your mother's money, please speak to them first, and then speak to your tax lawyer, and then speak to your accountant, and then make your own decision whether you want to go ahead and invest money in Bitcoin. So with that context being given, we'll talk a little bit today about what is cryptocurrency, what is Bitcoin, where did it come from, how does it work, is it an asset or is it a currency? It's called cryptocurrency after all. So is it a currency like the rupee or the dollar? Some people call it digital gold. Oh, that sounds very promising and alluring. Why is it called that? What are other cryptocurrencies? What is its uses? Something about a recent meltdown. Just very recently, a topic is timely, melted down. And I didn't mean the digital gold part of it, but it really collapsed in the market. And then looking ahead, what could it mean for us, for society? And hopefully I'll leave you a little bit wiser when you think about Bitcoin in the coming days. So first of all, some definitions. Cryptocurrency is a digital asset that is decentralized. So, and what do I mean by that? It is not issued by any central bank, nor by any central government, nor by any economy, nor by any territory. It's really issued by individuals, and the asset is a digital token, and a token is a computerized representation, a cryptographic representation of a string of numbers that are created by solving a hard mathematical problem. It has no backing. Nobody gives it any backing. It has no intrinsic value. It is completely digital vapor, if you will. And that is what is a cryptocurrency. There are over 5,000 cryptocurrencies in the world today. Bitcoin is by far the most valuable. Value as calculated by the number of coins in circulation times the current trading price per Bitcoin. There's enormous volatility, ups and downs over any day, over any week, any month, but it still is incredibly valuable, and we'll talk about that in a second today. So these are some of the most famous Bitcoins, cryptocurrencies. Bitcoin was released in 2009, Ethereum in 2015, and I won't read the whole rest, and something called Dogecoin was introduced in 2013, which really was almost a joke until Elon Musk started tweeting about it and drove up its value incredibly just by the power of his brand and reach, and by his declaration that Tesla would start accepting Dogecoin. So it is, these are all subject, some of them, to the whims and fancies of powerful and influential people. And they all are very, very recent, a little bit more than a decade old. So practically infancy as far as currencies and assets go around that. Now, almost all cryptocurrencies are secured by a technology called blockchain. It's important to know that if you hear the word blockchain or cryptocurrency, they're often used interchangeably. At its most basic, a blockchain is a record of transactions that anyone can view and verify. The blockchain for Bitcoin, for example, contains a record of everyone someone who has sent or received a Bitcoin. That's all it is. It is a ledger. It is a ledger that cannot be tampered with, and it is stored digitally, if you will, in a cryptographic manner. The list of transactions contained in the blockchain is fundamental because it can enable secure payments made between people who don't know each other. I don't have to know you, you don't have to know me, and more fundamentally, we don't have a third party, we don't have a bank that is involved. Recently, I tried to send some money to India. I needed to go through my bank here in the US, which had to talk to a bank in India, which had to follow statewide and governmental regulations about the transfer and movement of money, as it all is proper and rightfully so. But if you wanted to send Bitcoin to someone in another part of the world, you can do it directly between him or her. All that it needs is each of you needs a digital wallet, needs to have the currency, and you can send it from your mobile phone without anybody else being involved or being the wiser of it. That's a really powerful platform in technology, capable of a lot of good, but also a lot of potential for misuse, if you will. So there are a lot of people who have opinions on this. Famous people, powerful people. Jack Dorsey, who is the founder of Twitter, one of the most powerful and influential media companies in the world, lots of it in spotlight today, for all right and wrong reasons. It's about to be acquired by Elon Musk. If that goes through, that's a whole different FOSWL chapter. One could probably talk about that. Declared the world will have ultimately one currency, and it won't be the dollar, it won't be the Chinese yuan or ringgit or Indian rupee or European euro. He personally believes it will be Bitcoin. That's a very powerful and visionary statement, if you will. On the other end of the spectrum, we have a person no less than Warren Buffett, the CEO of Berkshire Hathaway, the octogenarian or nonagenarian. He's 90 years old, an incredibly successful investor, perhaps one of the most successful businessmen in US history, who as recently as last month at Warren Buffett's, Berkshire Hathaway's annual conference said, stay away from it. Even if you allowed me to purchase all the Bitcoin in the world for $25, I would not purchase it because it has no use. There is no value to it other than someone else being willing to pay more money for it, but I cannot produce anything productive. It is not like a piece of land that I can produce something for. It is not like a factory that can produce something useful. It is not like a group of people that can produce something useful. Stay away from it. It's a mirage. It's basically useless. On the other hand, we have Jim Cramer, who is a very flamboyant stock market reporter, He is also a hedge fund investor himself. He's made hundreds of millions of dollars by putting his money where his mouth is. He trades in stocks and equities, and he puts his money where his mouth is, and he says, I would take compensation in Bitcoin. So if you want to pay me in Bitcoin, I would gladly accept it. That's a powerful testament. If someone is willing to take their earnings in Bitcoin and willing to ride their fate in Bitcoin, if you will. So lots of different opinions on the spectrum of the market, and you would be forgiven if, as an average person, you are really confused what to make of it, because people are almost having opposite perspective of this. $60,280. That number represented the price of Bitcoin when I gave the talk, this similar talk, to the Rotary Club of Ananagar last year. So incredibly valuable. If you had one Bitcoin and if you bought it when it was cheap, this is the amount of money you would have made, which is, or you could make if you were to sell it. But woe and behold, if you didn't sell it last year and held it till yesterday, this is the price of Bitcoin, $30,177. So if you bought a Bitcoin last year after my Rotary talk, as I said, there was no investment advice given. You would have seen your investment or your father's or your mother's investment go down in half. That's a very painful experience to have. But that is the reality of it, and the volatility associated with the price of cryptocurrency in general and in Bitcoin in particular. $567.8. What is that? Well, it's actually not dollars. It is billions of dollars, and it represents the market cap of all Bitcoins created today. That's more than the Fortune 500 value of most Fortune 500 companies. So if you take Bitcoin alone, it's worth more than GE, it's worth more than Procter & Gamble. It approaches the value of Facebook or some other technology companies. So a massive amount of value has been accrued to Bitcoin in 11 short years or 12 short years since it was first conceived. So let's talk about that. Who conceived Bitcoin? Satoshi Nakamoto, a wonderful sounding name. Sounds like a name of a Japanese person, but it really is a pseudonym, and it is the name given to the anonymous inventor of Bitcoin. I say anonymous because nobody really knows who he is to date, despite its massive market success, despite all the technological innovations that are being built on blockchain and Bitcoin. One doesn't know who is Satoshi Nakamoto, who is this famous or infamous inventor of Bitcoin. How did he invent Bitcoin? In the most, millennial sort of way, but perhaps also the most traditional sort of way, as with many scientific innovations. He solved a hard problem associated with digital currencies with a white paper that is for anyone and everyone to see, and published it in the public domain in 2008. He wrote down his thoughts and put it out for peer review that others could see it, and it caught on like wildfire. September 15th, 2008 was the date, before that, September 15, 2008. How can I skip over this? It was the date of the financial collapse here in the United States and spurred the subsequent collapse of financial markets worldwide and caused a lot of pain to average citizens, but to a lot of businesses, and resulted in the subsequent recession and the stock market collapse that happened over a couple of years. It sent fundamental turmoil in financial markets. It was brought about by the housing bubble and a crisis in the housing market where people were trading inflated assets, what they knew and believed to be worthless essentially, and selling them off to others who were unwary of how low the value were of these assets, collateralized assets of mortgages bought by people who could not repay those loans. So what are known as subprime and worthless collateral, if you will. And that really is a fundamental breakdown in trust. You, I, and others who invest our money in these financial organizations have a belief, have an unspoken contract with them that they organize themselves and hold themselves to a fiduciary principle, but do it by the law, but above all are morally not bankrupt and deal with it in a very honest manner. And that wasn't the case. The entire industry was truly operating on a Ponzi scheme and selling these collaterals to the next person who would buy it. An immense amount of value was being created on paper, and stocks were inflated, and the housing bubble was perpetuated in the US and worldwide until it collapsed when people were no longer willing to buy these assets, and then the entire market collapsed and people lost their shirt, if you will. And this deeply bothered Satoshi Nakamoto. We'll go by that name because we have no other name to call him. And he was deeply, deeply troubled by this loss and this power that organizations had, that financial institutions had, and he thought there must be a better way to conduct transactions. So October 31st, 2008, he published his white paper, called it Bitcoin, a peer-to-peer, meaning person-to-person, version of electronic cash that would allow online payments sent to another, and this is the important part, without going through a financial institution. I don't need the government of India. I don't want a corporation. I'm going to democratize this and give it to others and allow computers and mathematics to serve the role of trust and allow this to be a trusted network that people can rely on, and so that the mistakes and the largesses that are happening through these organizations would not happen again. A very, very noble vision, if you will. And if you look on his white paper, he expounds a little bit more about commerce. As I mentioned, it relies exclusively on financial institutions today, trade, whether you're buying or selling stocks or currencies or goods, or exporting goods from India, or importing widgets from China, or selling cheese from Switzerland, whatever it is, it suffers through brokerage of electronic payments through third parties and suffers from the weaknesses of trust and transaction fees and speed of those transactions. So what is needed is an electronic payment system, he said, that allows any two willing parties to directly transact with each other. And he said that would be better as long as those nodes are controlled, to be honest, and tamper-proof through CPU, which is the computational power of a computer, and it allows it to be hacker-proof from third-party intermediaries. So to tell you a little bit about what that is, I'm going to play a video of what is Bitcoin, a 2-minute video, how Bitcoin is created and mined, because it does a far better job than me droning on and talking about that. So give me a second, and hopefully you'll be able to see and hear that video. Give me a thumbs up or no if you can't hear it in a second.
What is Bitcoin mining? Bitcoin operates as a peer-to-peer network. This means that everyone who uses Bitcoin is a tiny fraction of the bank of Bitcoin. But where do Bitcoins come from? With paper money, a government decides when to print and distribute money. Bitcoin doesn't have a central government. With Bitcoin, miners use special software to solve math problems and are issued a certain number of Bitcoins in exchange. This provides a smart way to issue the currency and also creates an incentive for more people to mine. And since miners are required to approve Bitcoin transactions, more miners means a more secure network. The Bitcoin network automatically changes the difficulty of the math problems, depending on how fast they're being solved. In the early days, Bitcoin miners solved these math problems with the processors in their computers. Soon, miners discovered that graphics cards used for gaming were much better suited to this kind of math. Graphics cards are faster, they use more electricity and generate a lot of heat. The first commercial Bitcoin mining products included chips that were reprogrammed for mining Bitcoin. These chips were faster, but still power hungry. ASIC, or application-specific integrated circuit chips, are designed specifically for Bitcoin mining. ASIC technology has made Bitcoin mining even faster while using less power. As the popularity of Bitcoin increases, more miners join the network, making it more difficult for individuals to solve the math problems. To overcome this, miners have developed a way to work together in pools. Pools of miners find solutions faster than their individual members, and each miner is rewarded proportionate to the amount of work he or she provides. Mining is an important and integral part of Bitcoin that ensures fairness while keeping the Bitcoin network stable, safe, and secure. For more information about Bitcoin mining, visit bitcoinmining.com.
So hopefully that gave you a crisp understanding, but essentially Bitcoin mining is just like gold mining. You have to do work, you have to expend energy, and you create it. Unlike gold, which is found deep within nature, deep underneath our soil, Bitcoin is created by solving hard math problems that create these unique cryptographic tokens. And there is a finite number of Bitcoins that can be mined, just like there is a finite amount of gold in the world. So their analogs are actually beautiful and very apt, but the nature of product and asset is fundamentally different. But that's why the word mining is used when talking about Bitcoin. So January 3rd, 2009, that's a very important date. It is the date when the first Bitcoin block was mined by Satoshi Nakamoto. So he put out his white paper, he talked about it, then he put his money where his mouth is. Like a good computer scientist, he decided to convert it and create the first Bitcoin by writing the software code that creates and solves this hard problem and creates a block of blockchain, and that is called the first block of blockchain, Bitcoin. The first price of Bitcoin was 8,000s or 10,000s of a dollar. So a fraction of a penny is what the price of the first Bitcoin was. If you remember and paid attention, the price of Bitcoin today is $30,000. So someone who had mined Bitcoin, a dozen Bitcoins back then would have, or maybe even 10,000 Bitcoins back then, would have spent no more than $1 to buy it from someone else. And speaking of that, May 22nd, 2010 was the first known economic transaction using Bitcoin. That day, someone bought the most commonplace of item, as you could imagine, a slice of pizza using Bitcoin. Florida-based programmer Laszlo Hanyecek sent 10,000 Bitcoins. So remember, it costed him probably $1 or $2 to mine it or to buy it. And he sent it to a London man in exchange for 2 pizzas, valued at $25,000. He thought he was being really smart by using a new nascent technology to buy a piece of pizza. And remember, at that time, they thought Bitcoin perhaps could be currency, just like I'm sending you a rupee today and $1. But currencies don't suffer from this massive amounts of price fluctuation and increase. So the $25 that he spent on pizza, if he had kept till today, Laszlo would have been worth $300 million. This is perhaps the most expensive pizza in the history of pizza that could be bought ever. And that happens to be May 22nd. So that is tomorrow in India and tomorrow here in the US as well. If you go buy yourself a slice of pizza, remember you're celebrating Bitcoin Pizza Day, and be thankful that you didn't spend a Bitcoin to buy it. So that's a little bit of the history around this. So let's talk a little bit about digital gold and why it's called that. Like gold, as I said, Bitcoin cannot be created arbitrarily. It must be mined, and it must be mined via digital means. And Bitcoin's founder, Satoshi Nakamoto, stipulated in the core algorithm of Bitcoin and in the white paper and its architecture that the supply of Bitcoin is finite and limited. It cannot be changed. You can take it like the law of Bitcoin. It's like a law of nature. And only 21 million Bitcoins can be mined in total. That's it. No more, no less. Once The computers have solved the hard problem. And by the way, every time a piece of Bitcoin is mined, the math problem gets harder and harder. And so it takes more and more computer resources to calculate and solve the problem to create one Bitcoin. So to create one Bitcoin tomorrow takes longer than it creates one Bitcoin yesterday. So it takes more and more time. Nevertheless, they expect that the Bitcoin, all the Bitcoins will be mined in this century. And when that is done, it will be 21 million. No more, no less. When miners have unlocked this, the Bitcoin supply will be tapped out. As I said, unless someone changes the Bitcoin protocol, but changing of the Bitcoin protocol is not an easy task and requires the entire community to allow to vote on it and deal with that. And it's a subject we won't talk about today. How does it happen? Through cryptographic computers. And computers are located in server farms. So starting from that humble one computer that probably Satoshi Nakamoto used, now hundreds and thousands of computers are located in server farms like this all across the world, power-hungry computers that consume enormous amount of power in order to solve these math problems, in order to create and mine Bitcoin. How much energy does it take? The answer is a lot. For creating all the Bitcoin in the world that has been mined so far, the amount of energy that has been consumed is a little bit more than the annual energy consumption of Norway, a little bit less than the energy consumption of Egypt. It's estimated that about 0.67% of the world's energy consumption is used to create Bitcoin so far. So if you think about that, that is mind-boggling. You can operate an entire country for the amount of energy that is used to create Bitcoin. And it promises to be more in the future. So the enormous amount of energy consumption. So one really has to value in this world where energy is finite, where the enormous rise in energy prices, is this appropriate? Is this a good use of world scarce energy around that? How many Bitcoins have been mined today? This logarithmic chart shows how Bitcoin mining has happened. And it shows from the first year, 2009 till now, and it goes from 100 to 1,000 to 10,000 to 10 million. It is what is called a log chart. And you can see in the first year, less than that, in the first few days, massive amount of Bitcoin was mined, million Bitcoins. And in the first few years, 10 million Bitcoins or close to that were mined by mostly computer programmers, people who are doing this, hackers, and created these Bitcoins and sold amongst themselves and others around that. And after that, the amount of Bitcoin that is being mined asymptotically decreases in rate. And every year, less and less is created than the prior year, and it will reach its maximum of about 21 million Bitcoins fairly soon. Allow me to change the screen, the location here. So you can see that. 1 second. I just need to change. Sorry, this is covering up the Zoom.
You're obviously on an Apple system, right?
That's
very
right.
different from the.
So 2140 is the year one estimates the last piece of Bitcoin will be mined. So just around the corner, another 18 years or so, and we expect all Bitcoins to be mined according to the protocol. And what has been the price trend? As I mentioned, it started from a fraction of a penny to $30,000. And you can see this is the volatile journey that Bitcoin had. So when your niece or nephew or friend decides to invest in Bitcoin, this is the journey that they have taken. I invested some Bitcoin or money in Bitcoin when the price was about $425. So I'm very pleased where it is right now. But I would not have been so pleased if I had bought it last year, as I mentioned, at $60,000, because now the price has dropped to $30,000. and it's been fluctuating enormously since then. And just because it's at 30,000, there is no guarantee that it will not go down to zero at some point in the future, or it could go back up. So that is sort of what is the nature of an unregulated entity that is based upon computer protocols. And the market cap accordingly has fluctuated from zero to $1.2 trillion to now about $571 billion, around that. A Satoshi is the smallest amount of Bitcoin that someone can own, is 1/100th of a million of a Bitcoin. So Satoshi Nakamoto has thought ahead. When he created it, he knew, or he believed, it could be incredibly valuable. So if a Bitcoin is $100,000 or $1 million, you can't afford to buy one Bitcoin. So he created that one can own 1/100th of a million of a Bitcoin. So if it's $1 million, you can buy a Satoshi, which would then be equivalent to a penny of a dollar. So seems to be something that might be affordable. So clearly he believes that it could become enormously valuable. So where could it go from here and where we are in the game of Bitcoin, if you will? Again, we'll go back to various pundits who talk about it, and many of them are very bearish and say it'll decline, and eventually everything about Bitcoin will go to zero. It has no value on its own. You cannot, it doesn't create anything. It doesn't produce cheese. If the world implodes tomorrow and we have a terrible natural catastrophe or war or anything else, it cannot do you any good. You're better off owning a piece of land that produces some vegetables, or owning some sheep that produce wool, or some cows that produce milk. Those are things that you can use. But Bitcoin has no value, is what some people say. Others, like Charlie Munger, who is Warren Buffett's 96-year-old partner and an astute investor, very wise individual, went and said, Bitcoin is rat poison. I wish it was never invented. That's a very, very powerful statement to make. And others have saying it's a terrible store of value. It will become mainstream. And as it becomes more mainstream, governments around the world will make it their mission to stop this, because no government in its right mind will want Bitcoin to become the currency that its citizens operate in, and not the currency that the government issues for the sake of stability, for the sake of maintaining order and prosperity of its citizens. And we'll talk a little bit more about that in the Indian context, if you will. So sometimes there's something so observed that the argument for it is so self-evident, it shouldn't be explained, and Bitcoin and other cryptocurrencies are similar. So these are all the doom and gloom, as you would say, the naysayers. And there have been many of them, and many, many people. And if you believe those people, you would have missed out on all the value and didn't buy Bitcoin. You'd have missed out on all the value and the price increase that happened. And you could have created a tiny pocket of wealth for yourself. And I must say, personally, my little small investment, I only invested a small amount, just to be saying, as they say, have a skin in the game, because that makes you pay more attention. And that has been economically rewarding. So I'm glad I did something. But on the other hand, would I invest majority of my wealth and hard-earned savings into it? Probably not. So if you believe that, then Bitcoin would be dead. That's the obituaries. But at the same time, many, many institutions, the Deutsche Bank has gone and said Bitcoin is too important to be ignored and will continue to attract asset managers and companies. In fact, just last month, Fidelity, which is one of the largest mutual funds in the United States and has trillions of dollars, has allowed ordinary citizens like you and I to invest our retirement dollars and buy Bitcoin and invest it through the Fidelity 401k. An action that many have assailed as to be very dangerous, because it allows now ordinary people to invest and speculate and perhaps lose their life savings. But nonetheless, Fidelity has allowed that, but has attracted criticism about its action by federal government and others around that. Deutsche Bank says 52% of its investors expect Bitcoin to go down below $60,000. This was last year when I gave the talk at the Rotary Club, and 52% of investors were 100% right. The price of Bitcoin is now $30,000. So the other 48% were wrong, but who knows, they might be wrong tomorrow or next year. You never know. It's highly volatile. The federal chairman has said because of its volatility, it's not a good store of value. It's more a speculative asset that's a substitute for gold, and hence the popular pseudonym digital gold rather than a substitute for the dollar or a rupee or the euro. So hopefully I've addressed that question in your mind, whether Bitcoin is a currency or an asset. By and large, most people believe today, based on the enormous price volatility in Bitcoin, it can't be regarded as a currency. It's more as an asset, and if so, a speculative one. Now, gold today as an asset, there are about 2,500 tons mined per year in the world. Today, 191,000 tons have been mined in total in the world. And if you believe that, it's about 75% of the world's supply. So lots of parallels to Bitcoin or vice versa, a scarce commodity mined on an annual basis, and a large fraction of it has been mined to date. Some of it is remaining to be mined. And if you take today's spot price of gold, then the value of gold multiplied by today's spot price of $1,800 approximately is $9.37 trillion. That's the value of the entire amount of gold that is being mined and stored in banks' vaults, but also at people's homes and the jewelry that you, your spouses, and your children all wear and perhaps have at home. And if you think that Bitcoin will replace gold as the digital gold, the governments no longer use gold in order to hedge for inflation or go to and buy when times become troubled, like recently with Russia's invasion of Ukraine, gold started becoming more popular and people started buying gold instead of stocks and equities. Then if you think that gold will be replacing Bitcoin and this entire 9.37 trillion becomes digital gold, then the price of Bitcoin replacing gold could go from the $30,000 to $510,000. If you multiply 21 million times divide 9.37 trillion by 21 million, you get approximately $510,000. That's the price of one Bitcoin. And if you believe that, then you should buy Bitcoin today and hold on to it for dear life, because at some day it could be worth, more than 20 times as much of money as it's worth today, or it could be perhaps worth more or zero. So that gives you an idea how to think about it. Again, not an idea. Tesla made a big announcement early last year that they would buy Bitcoin and store it on the balance sheet. Then they promptly went ahead and sold all of that. Elon Musk is known to make statements and reverse his position in a matter of minutes. So, but again, it's a statement from one of the most powerful companies in the world and one of the most famous technology aficionados, if you will. He started saying you can buy from Tesla with Bitcoins. They would accept it as a transaction. Soon afterwards, he stopped accepting it because he said it is energy inefficient and he's a big proponent of sustainable energy. Then later on, he reversed his position by saying most of Bitcoin is mined by energy efficient means. So he started accepting it again. So it's all over the world. And last month, Emirates Airline has announced that they will accept Bitcoin to buy tickets. And so if you want to buy a ticket on Emirates to travel to the US or other parts of the world, very soon you can pay with Bitcoin. So it's becoming a very ubiquitous and confusing world where things are being stated, opposite things every day in the press around that. And it's almost 10 years old. Many countries do not have explicit systems that regulate it, and it's operating in what is called a legal gray area for much of the world. China has banned Bitcoin mining, but it's moved to other parts of the world. And so it's a very, very strange and difficult time that we live in if you're trying to make sense of it. But at the same time, billions and billions of dollars are being invested in Bitcoin and technologies that are spawned from Bitcoin by venture capitalists, by large investment money managers. So you could say in some way that the smart money is following it, something is there, and perhaps we just are not smart enough to understand it. So let's talk a little bit about what that might be. And I'm going to talk about 4 such items, and that's probably the next 10 minutes, and we'll end with that. Bitcoins are volatile assets. So people try to come up with what are called stable coins. Again, cryptographic coins that are pegged to another asset class or are maintained to maintain the price stably. So if it is $1, it will be pegged to $1, and that stable coin won't fluctuate wildly. And you can use it to buy a slice of pizza like Laszlo did, knowing and sleeping that you're not going to have paid something that tomorrow might be worth 1,000 times that amount. So that's a very interesting concept and sounds very powerful around that. And many stable coins came into addition. One famous one called Terra or Luna came into the press just a couple of years ago. And if you had invested $1 million in Luna, I said a week ago, but when this article came about, it's about a month ago or 2-3 weeks ago, you could have bought $1 million of Luna. That would have been worth 50 cents. You would have lost 99.9999% of the value of that currency, and it went to near zero. It imploded. It imploded in a matter of days. It collapsed completely. And thousands of people lost their money. Average people like you and I who invested hundreds and thousands of dollars and lost their money. Who invented Luna? It was invented by a 30-year-old kid, a really smart kid, Do Kwon. He worked at Apple and other technology companies, and he left those companies. He graduated from Stanford. He's a South Korean entrepreneur and said this idea of a stable coin is truly important, and he's going to allow algorithms to allow a stable base. Many people derided it and said it was doomed to fail, but he said, I'm not going to listen to people who are poor. I'm going to make something that is going to be enormously valuable. And he attracted over $200 million of investment from very, very powerful and famous companies that bet into it. So in many ways, it resembles the boom in the early 2000s or mid 2000s in real estate investment, where wealthy and investment managers hyped up an asset and it collapsed completely underneath unsuspecting retail investors in a matter of days. It dragged down the whole class of cryptocurrency. There's a major cloud around that, and in no small ways is the collapse of stablecoin responsible for a significant portion of the decline in the value of Bitcoin along with that. And again, these are some of the news and talks about that. He founded it, he called it Luna, named his firstborn daughter Luna after an invention, and said that the two most important things in his life are Luna, his daughter, and the stable coin that he invented. Pantera Capital, an investment manager, invested $1.7 million 2 years ago, and they made $170 million in profit by selling their entire investment, and they came ahead. So they converted $1.7 million into this Luna cryptocurrency and converted into real money, sold it, walked away, and said, thank you very much. I'll pay the taxes on my investment and gain, but I'm done. Others were not so smart and lost all their money in a matter of days around that. And now Do Kwon tweeted on May 13th, so just a little over a week ago, I'm heartbroken about the pain my invention has brought to all of you, and I'm deeply sorry for the loss that you have incurred. I'm sure he means it from the bottom of his heart, but it is no solace to your friends and your friends' children who perhaps might have lost a lot of their parents' money if they had invested. So buyer beware around that. NFTs are the second topic I want to talk about, also called non-fungible tokens. And they're becoming very, very popular today. What are non-fungible tokens? Again, they're a digital asset. To describe ownership, NFTs really are giving you a unique way to describe that you own a piece of art. You own a piece of real estate. It is not the piece of art itself or not the piece of land. It's more like a marriage certificate to your marriage. It's not your wife or husband, but it is the piece of paper in a cryptographic manner that describes when you got married, who you got married to. So it is a cryptographic asset that describes you own a piece of either digital or real art. The piece of art itself can be traded, or in the world of digital art can be copied 1 million times. So others could own it. without having to buy these NFTs. So in many ways, it seems like, what are you really buying here, NFTs? But they give real power to content creators, people who create music, who create art, and who in the past had to go through intermediaries who had to ascertain to buy their music or art. And now they can directly sell to people who then can have this piece of ownership and pride, and have created a really valuable means of making a living for thousands of artists around the world around that. So it's really, truly a relevant means, but it has also happened to some very ridiculous things. Jack Dorsey, the founder of Twitter, tweeted, and his first tweet, you can find it. If you search for it, you can find it, I can find it, and make a copy of it. He made a copy of it, and then he created an NFT, which is a cryptographic hash of that, and said, my NFT of my first tweet, and I put it up for auction. It went for a few $1,000s. Then a Malaysian hedge fund investor bought it for $2.9 million. What he bought, nobody knows, because again, as I said, every one of us can go to Twitter, find the tweet, make a copy of what Jack Dorsey tweeted, his first tweet, and share it freely among us. But this NFT describes the ownership of something that Jack put out. It's like a piece of collectible. And this esoteric piece went for $2.9 million. Again, it went on what is called the greater fool theory. That person tried to sell it last year, and he thought he would sell it for $50 million. He's not getting anything more than a few $100s. So currently, they're saying you might get a few $1,000s. So his entire investment, $2.9 million, is basically worth nothing. So again, massive speculative froth. NFT sales are flatlining, is the article in the Wall Street Journal, and people are speculating NFTs could be the next area to crash, if you will. So, but again, there's a lot of productive assets, but it's a frothy area. DeFi is another term you might hear a lot. It's called Decentralized Finance. And what is that? It's, again, we're starting to getting more and more complex, but its most basic it is, with DeFi, you can do things that banks support. If you think of cryptocurrency based on blockchain, like Bitcoin, as being something that you can trade, DeFi are things that you can trade on top of assets. If you have an asset, for example, you can earn interest by lending it out, or you can borrow that asset, or you can do derivatives that are based on the price of assets. So all sorts of financial instruments have been developed today by banks to trade on assets. DeFi is the exact equivalent of that, but it happens without any paperwork, without any third party. People can, between each other, start trading, loaning each other Bitcoins, borrowing Bitcoins, generating interest, paying off loans, arbitrage, a whole bunch of arcane financial instruments have evolved around that. And it is no surprise that perhaps one of the first most powerful and fertile uses of Bitcoin is in the area of financial services. The reason for this exists for perhaps very altruistic reasons. If you think about it, 1.7 billion people, and this is from a presentation that Andreessen Horowitz put out just 2 days ago, a huge presentation on the state of crypto. And a part of what they're saying, the power of crypto, is that a large part of the people in the world today don't have a bank account. It's a very noble vision. And with the ubiquity of the mobile and the internet, of the 1.7 billion people who don't have a bank account, 1 billion of them have access to a mobile phone, and 480 million have internet. You are very familiar with in India, where your fruit vendor or your vegetable vendor or your chai wala has a mobile phone and asks you, sir, do you have a Paytm? And can you pay me on a mobile phone? At this point, they're accepting currency, digital currency based on the government of India. But the whole notion is, what if those people could create a bank account that is not issued by a bank? They don't have to fill out paperwork, go stand in line, prove their identity, can do all of this, accept payments, transmit payments, and democratize this in a way that becomes extraordinarily friction-free. Because every payment has a cut. You have to pay a fee. If I do a credit card transaction, the seller or the person who accepts the credit card has to pay a 2% fee on that transaction to Visa or MasterCard. If you are accruing debt on credit cards, you have to pay 18% interest to Visa or MasterCard, the bank that issues you the credit card. So those fees add up to real money. And this is a potential that people are saying that DeFi, decentralized financial products, can avoid and enable peer-to-peer financial products to exist that can happen at a fraction of a cost, faster, without all the hassle and all the paperwork associated with that. A powerful vision, a complex and perhaps arcane vision, but one there's a lot of investment and a lot of young energy that is going into creating products that perhaps fulfill that vision. What is Web3? That is the most new word that is being tossed about. This is an article from the Harvard Business Review, the August publication that deals in the business world, May 10th, 2022. So your topic that you asked me to speak on is very timely. The entire world is talking about these things right now. The Harvard Business Review, The Economist, the New York Times, the Economic Times in India, the Hindu, wherever you go, as Subbarao said, people are talking about it. And Web3 is a technology that is given to a kind of internet services that are built on decentralized blockchains. Is an extension of cryptocurrency using blockchains. What does that mean? Let me try and simplify it for you. Web 1, 30 years ago, when I first started in the web world, was about Yahoo, Netscape, the World Wide Web, the browsers. What that primarily enabled you, the creation of Hotmail, which was made famous by an Indian origin entrepreneur, Samir Bhatia, who sold it to Microsoft. Those enabled largely people to read content that was published by publishers, organizations, and you could access the web. You could perhaps read your email. That was Web 1.0, if you will, based on infrastructure that was capable for the first 10 years, the World Wide Web, HTTPS, browsers, and the ability for you to access content over the internet and a computer. The second revolution of the internet, Web 2, mostly people talk about it 2005 onwards with the advent of Facebook, Google, YouTube, basically social media and powerful technology giants and the advent of the mobile phone that allowed a lot of economic transactions to happen, but are based upon data being collected by central entities. If you think about it, Facebook is making money. The famous response Mark Zuckerberg gave to the senators in the US Congress when they asked him, how does Facebook money? He turned around and said, Senator, we make money by selling ads. We sell ads because we know exactly when you are on Facebook, what you looked at, what properties interest you, what you shared, when, where you were, what YouTube videos you saw, what transactions you bought. If you look at your digital crumb trail, these companies have a very, very, very accurate profile of who Karthik Hariharan is, what he likes, who he interacts with, etc. And this digital exhaust that they own and that they can transact with is how they make money. And this money accrues to a handful of large organizations, the oligopoly as people call it, and a lot of wealth is concentrated in Facebook, in Google, in Microsoft, in Apple, in Netflix, etc. The future, as people are saying, is what if this is democratized? What if you and I, and to make it simple to you, for example, you and I, instead of owning Uber, you could own a piece of the internet. If every Uber driver owns a piece of Uber so that they become a stockholder of Uber and when you, or Ola, and when you take an Ola ride and that money is made, he not only makes based on the amount of money that Ola chooses to him, but he owns the network because it's built upon decentralized cryptographic blockchain that everybody owns a piece of. What if you owned your piece of data and that if anybody wants to serve you an ad, had to pay you a piece of money in order to serve you an ad as opposed to Facebook? What if you owned your health data and you were able to go and sell your health data to Big Pharma who's making research and developing the next piece of drugs? And we all know how important data is to developing drugs. The entire vaccination was developed on data that was the largest public experiment in human history. So what if you could be part of that if you wanted to and make money off of that, or choose not to participate if you didn't want to and retain your privacy? That at its core is the powerful idea that is driving Web3, a whole bunch of services that are powered on the internet that you and I take for granted today, the buying of services, the delivery of groceries to your doorsteps, the purchase of airline tickets, etc. But you own a piece of the internet. That is about the future. Let me take it to India and bring this talk to a close. Where is India? India has gone a long way in cryptocurrency. Just like with mobile and the internet, we really leapfrog the world. And there are about 15 to 20 million investors in India holding 5 billion in cryptocurrency. So a large amount. So Subbarao's nephew among them, representing the second largest amount of crypto traders worldwide. So it's a lot of attention. So you'll be forgiven if you're hearing about this every day by friends or family in India around that. But it's gotten off to a rough start the last few years, and it's perhaps can get worse. And it's in an area of deep legal gray zone for all the right reasons and perhaps not so right reason, but it is an area that is constantly evolving. Let me tell you a little bit of what is happening in that area. New Delhi has basically left the fundamental reason whether crypto trading in India is legal or not largely unsaid. In 2018, they banned all crypto trading. So when I gave the talk last year, it was like you couldn't even buy cryptocurrency in India. And then the Supreme Court overturned that ban. And then last November, the legislators wanted to ban it and then reverse their position because of industry-wide panic. There's a lot of industry attention, a lot of commerce, and a lot of economic activity. So they didn't want to kill the goose that lays the golden egg, if you will. So since then, more recently, in February of this year, India, and this is a tongue-in-cheek tweet by an organization, they cleared the confusion by taxing crypto assets. So then immediately came the reply, we did not legalize, but instead we decided to make money. Just because we think gambling happens, we are not saying gambling is legal, but we're going to make money. And if you're going to profit off of that, we're going to start taxing people who are making money off of those profits. So that's the position of the Indian Finance Ministry. The Finance Secretary went further and said Bitcoin, Ethereum will never become legal tender in India. It'll never replace the rupee. And the Deputy Governor of RBI, Ravi Shankar, was even more direct, just like Warren Buffett and others, is saying it may be a Ponzi scheme. You buy it just because you think someone else would buy it. So, and pay more for it. So that's the only reason you're buying around that. So those are the prognostications. It's in an incredible area of legal confusion. The Indian Parliament met just a few weeks ago with the crypto community and chided them. You are spending way too much time in talking about yourself, in making yourself to be known to the public, and not spending enough time in thinking about the issues of how to avoid speculation, of how to avoid it being used for terrorism or to be used for fueling drug trade or all the other nefarious activities that accompany an asset that is unregulated and that is anonymous or pseudo-anonymous around that. So all valid points, but at the same time, you've heard the powerful potential that people are aspiring, young, noble, and really eager minds that are coming out and wanting to create a better future for all of us around that. Basic thing though is you no longer go to jail. As someone said, if you own a cryptocurrency, again, your nephew or your friend is likely not to go to jail as a holder of crypto. So that's good news, if you will. There are ways you can buy cryptocurrency in India, apparently legally through crypto asset management platforms, even though there is no formal government position on that. So with that, I will end my talk with an epilogue. Satoshi Nakamoto is merely a pseudonym. We don't know where he came from. We don't know where he'll go. And perhaps that is a useful reminder for us how to think about Bitcoin and investments. It remains a mystery And it really is a profound mystery that a person who created something that has captured so much of public psyche, so much of technology activity, not just investment dollars, but thousands of smart young people, the smartest computer scientists and engineers and economists and traders and merchants and people are now talking about it and spending their time. But no one knows who it is, and no one can verify who it is. So with that, I'll conclude my talk and take a few questions. I hope I've not made this whole mystery of Bitcoin even more mysterious for all of you, but given you something to give you, if you will, some guidance along the journey. Thank you, Subbarao, and thank you, FOSWL Hyderabad, for the opportunity.
Great. Would you like to unshare your screen?
Yes, I'll do that in a second. There it is.
There you are. I think everybody will agree with me when I say that we probably need a few seconds to let things sink in. There's so much thrown at us from the realm of the unknown and the emerging, I would say. I think, as expected, the younger folks in the meeting had the most questions, and Chandani is leading that if you look at your chat box. But let me start with this very fundamental thing, Karthik. And I think it is representative of some of the questions which came on my personal chat window or on my WhatsApp. And the thought is this: does Bitcoin or the concept of cryptocurrency, does it not agitate against the core fundamental building blocks of economics itself? And to explain that a bit, whatever is happening, this 20 million or 5 million or 200 million people around the world are but a fraction, a minuscule fraction of privileged people who have access to technology, who can indulge in trading or buying and selling or whatever, participate in the Bitcoin. So it is not really democratic in that way when you take the planet as a whole. And the second thing is, if cryptocurrency is such a hot thing, why is the value of cryptocurrency always compared to the real world money? It's worth $60,000. It's dropped to $30,000. Why can't they say, use some other crypto language? So that means, is it a big, like the housing debacle of 2008, the subprime crisis? Is it something in the arena of the unknown and something you can't touch and feel? And your last slide was very indicative of that. Nobody knows whether this is one individual or a group of individuals. And incidentally, India is catching up with the world very fast. We recently had an incident of the National Stock Exchange, which is supposed to regulate all the companies in the country, taking advice from a sage in Himalaya who operates the email. So you see, we've gone one step beyond the cryptocurrency. And the last point on this questioning of the fundamental economic principle is, and I think some of the questions of Chandani and others, Pradeep and all refer to that, is the fundamental concept of economy is that if there is value created in a transaction, and if crypto is changing hands without creating any tangible value, and the argument could be that this is all conventional wisdom, we are going away, we are going to the next level. But nevertheless, if there is something that you cannot touch, feel, see, you cannot see it work, you cannot buy other than the pizza, you can't buy vegetables or whatever. Does this whole concept not agitate against the fundamentals of economics as it is known to the world today?
Great questions. Thank you. And I just quickly glanced at the chat thread as well. So we'll come back to some of those. But I think many of them are subsumed in your two bookend questions, if you will, Subbarao. So let me start with your second question first, which is, why do you have to refer Bitcoin to a dollar if it has interest? Why can't it stand on its own two legs instead of a cow is a cow? And you don't say, around that. So, and we know how much, 2 cows can produce X liters of milk if they're healthy, etc. Around that, you might say. And that is, I agree with you, and I agree with that. My daughter recently wrote a paper on Bitcoin in her economics class last month. And it is powerful, the exact argument that was made, which is, as long as you are, imputing value to Bitcoin based on real world currency, it is not really standing on its legs. It is not really a currency by itself. It is shining on borrowed feathers. It is based on value of the dollar, and you're converting into that around that. So I completely agree with that point of view that you cannot regard Bitcoin as a currency for that exact reason. It has no intrinsic right assigned to it by any governmental body or anything else that is trading in and of itself, except within its esoteric Bitcoin community. So it's a very fair point, and I agree with that. But the question is, will it remain like that forever? And that leads us to your first point, and the point about the fundamental economic and democratic principles of Bitcoin, right? And does it break the notion of economic transaction? Again, here is a perspective. Let's go back to what Satoshi Nakamoto articulated so clearly in his white paper. And the problem he was trying to solve. And if you believe that problem, you believe there is something that's being created, which is the problem he's saying is by putting someone in the middle who is all powerful, whether it's a government or a bank, I am giving up control to them, and I have to live by their rules. And I have to live by their rules as a citizen of the world. And that is not very democratic. I might live in a very democratic country like India. I might live in a less democratic society. I don't know, but I'm living by their rules. And governments can choose to do whatever they want and make it illegal or legal and intervene very strongly or control it like China does or otherwise. Secondly, I'm living by the whims and fates of other organizations who may be engaged in nefarious activities, and I see my entire wealth implode. If you had stored your money in the stock market and lost your entire wealth in the 2008 or 9 stock market collapse, you would not feel so good about the financial system that we are living in or had lived in around that. So the notion was to be actually very democratic and protect the individual from these central intermediaries and allow the money and exchanges to happen person to person. What could be less democratic than that? It is empowering every individual. Now, you make a good point. Not everybody has access to the technology. Absolutely true. And this is where it becomes sort of being the utopian dream and visions of technology aficionados, which is why it has its root in people who are frustrated with the internet and the promise of the internet being not realized. They say the internet has evolved into being controlled by a handful of organizations who shape what you see. It is not untrue that Facebook perhaps shaped the US election, whether for good or bad. Donald Trump's use of Twitter and his banning subsequently of Twitter has shaped the US election. Wars are fought across the world. China stifles its citizenry and opinions on the internet. So the internet has become a way to govern and be governed by organizations and companies. And we no longer are consuming things of our own freedom around that. And that is a very troubling notion if you think about 100 years from now or 500 years from now. If you believe the internet will be around for 1,000 years, just like water has now been around forever, and that we can't live without internet, which probably is true in many cases. When we moved to our house after remodel, the first question my kids ask is, where is Wi-Fi? Not where is water, not where is heat, but where is Wi-Fi?
Yeah.
Without Wi-Fi, we are broken. I can't do anything around my household. I could go without water. I can buy water, but please let me have Wi-Fi. I can't access my bank. I'm like completely broken. So in a way, I cannot imagine the world. It is not at all a democratic world. There are millions and billions of people who don't have the luxury of that experience, and that as their first need. But at the same time, who would have told, if I had told you in India 25 years ago that 500 million people in India are going to have a mobile phone and they're going to do digital transactions and accept rupee from you. And if you want to pay them, they'll say, don't give me cash, but give me via Paytm. You would have laughed at me and said, that is not going to happen.
Yeah.
So if you connect the dots into the future, and as Steve Jobs famously said, you can only connect the dots looking backwards. You can never predict them going forwards, but you can. So this is built upon those two powerful principles. One is that economics do not benefit from an intermediary who controls the flow of money, who controls a cut of that, and who might be dishonest. And it is more economical and better if it is deregulated, as a principle number one. And as a principle number two is, it is better off if everything is flowing at the edges as opposed to through those intermediaries, enable transactions, not just money, but you to own a piece of that. Like I gave you in an example, it's far-fetched, but who knows, 30 years from now, Ola might be crypto Ola. Somebody had created that. And every time you take an Ola transaction, frankly, you as an Ola driver are powering Ola. Without the thousands of Ola drivers, there is no Ola. What if each of them owned a piece of the Ola and are not governed by the regulations of Ola, or Uber, which many of them complain about? I don't make enough money to make a living. I'm getting only a fraction of the transaction. It's not enough to pay my fuel costs, etc. So it could be a very powerful way for those people to make a living around that. So the point is very fair. It is not democratic today. Only a set of people have access to the internet. Only a small number of people are investing in it. But if you think about the future, could it become democratic? Perhaps. Would it happen in our lifetime? Likely not. But are we building, are the people aspiring to build something perhaps for the next 1,000 years? Is it likely that the internet in some form will persist? Probably so. I don't see a way around it, right? Put around that way. So let me pause there and see if that spawned more questions or more debates.
Sure. Just to share a thought, as I said earlier in the meeting, we had a former RBI governor, Dr. Y.V. Reddy, speak to us in one meeting. And we also had a bunch of libertarians. We have a libertarian group in Hyderabad, which is quite active. And many of you know that that group espouses exactly what Karthik described, right? No intermediary. They question the necessity of a central bank in any country, like the equivalent of a Reserve Bank of India. And I think the cryptocurrency alludes in some manner what they say, democratize and without an intermediary. But here's a thought. I mean, all these large companies like Facebook or Tesla or Google or what have you, all the big companies, in the name of democratizing and empowering the individual, they use a lot of intermediaries for their own business even today, is what one article I read recently says. So I think that's, the debate will go on. But as Karthik says, probably we are looking at a very early nascent stage of what is to come in the next 1,000 years. So let's go on to some other questions. Chandni, I like to try and crystallize this. So the first thing she asks is really the Bitcoin really democratic and free from regulation? Because she talks about the presence of platforms like Binance or Binance. I don't know how you pronounce it. Binance. And that is one question. Then she says, what happens after this 21 million Bitcoins, are mined? And also, is the link to the gold mining, is that environment friendly? And the last question she asked, I'm trying to capture everything in one. Smuggling. Does the digital mode of cryptocurrency make it easier for smuggling? I guess the embedded in that question is this whole, dark web, terrorism, or whatever, related activities. And let me get one last one. Does Bitcoin, is it mainly banking on volume? Just that if the whole world starts using it, then people are affected by it, and leaders will not let that happen because they lose power. So that's a lot of questions from Chandni.
A lot of questions. I'm not sure I will remember all of them, but let me try and start from the top around that. I do think you're right, like platforms like Binance or Coinbase, etc., are now functioning as intermediaries and are acting as pseudo banks. So in many ways, the true power of accessing these cryptocurrencies requires a level of technology sophistication that average people don't have. And as a result, you go through intermediaries who then act as a decentralized bank or have the very same problem. Like I invested in Bitcoin through Coinbase. Coinbase is a company that made it easier to purchase Bitcoin because the process was too arcane. And they created a wallet that allows me to store the Bitcoin. Recently, Coinbase came into the news because they have lost a lot of market value. They went from $300 to $70, lost most of the value around that. And they're basically trading on cash, the amount of cash that they have. And they have to say, there's a chance we might go bankrupt. And if we go bankrupt, they said, if you hold Bitcoins in Coinbase, there's no guarantee that we will be able to pay you out. So it's back to the same problem that you have with your bank that may go bankrupt around that. So unless you go to the source, which is difficult and arcane for the average person, you then are linked to the very same intermediary problem that these institutions are trying or proclaiming to be doing without, right? So point given, 10 points to Chandani for that. Question number 2 was, I'm just going.
There are, is it really democratic because there are regulatory like that Binance?
I don't know if democracy and regulation are two different, they're two orthogonal things or not necessarily perpendicular, if you will. It is democratic in the sense that the price of it is determined by the market, by trading around that. So that's the value. Nobody is imputing a price around this. It is created by computers that nobody is dictating, no government. Individuals are setting up computers all across the world. It is a groundswell moment that you cannot stop if you wanted to, because there is no one place. It is springing up on its own over the internet. So in that way, it's a genie that is not stoppable, but there are regulations that can outlaw it, that can ban it. And like China has banned Bitcoin mining. So you can't set up your servers in China. If you do, you're illegal, you'll go to jail. Clearly, you'll become known around that. And there are other aspects of regulation that are murky, whether you're going to be able to make, what's the amount of tax you pay on it, right? Is it going to be acceptable to be trading in that? So the regulations are still playing out and are a mighty gray zone all across the world with regard to crypto in general. Sure, please.
Yeah, Chandani.
Questions, but actually most of them, sir, you've already answered through the slides and stuff like that. The main thing that I still am kind of, thinking about is instead of creating an entirely new system that we're doing right now in terms of cryptocurrency and, this entire confusion that's coming out of the whole thing, wouldn't it make more sense for us to actually put in all this effort and resources, because this is environmentally detrimental as well, all the mining that we're doing, into actually taking the existing resource that we have, which is the dollar or the rupee or whatever, and finding a newer way to use money or trade?
So great question. I'll give you a tongue-in-cheek answer and perhaps a more serious perspective, right? The point about wouldn't it be better to be asked of something that is done by a collection of individuals, the mob, is akin to asking, wouldn't it be better if we didn't have a war between Russia and Ukraine and just talked amongst each other and came to a nice agreement and lived in peace in the world. Wouldn't it be better if there was not the desire to put someone on Mars, but instead solve our problems on Earth and have the greatest dichotomy on incongruity by the person who stands for sustainability and yet is consuming so much energy in putting a person on another planet instead of fixing this one, right? So there are so many, wouldn't it be better? But unfortunately, that's the beauty and the bane of being humans. We all have our own mind, and collective thinking does not go in the way that it would go, right? So it evolves, and that is what it is. Once you put a thought out there, it finds its place, and nature will find its way. And Bitcoin is a force of nature, cryptographic, computational nature, but you can't put that genie back in the bottle as much as you can live without a computer right now. On a more serious note, whether it is, with instead of money or not, again, the notion of Bitcoin was not necessarily to enable a currency or not. There is no, if you think about it now, what fundamentally it is based on blockchain. Blockchain was invented in 1991, and we didn't talk about that in this talk, but it becomes more mathematically complex and abstract. But really, Bitcoin is an application of blockchain, just like Ethereum is and many other protocols. And one could argue that the power of Bitcoin and Ethereums are not really in replacing money or currency, but in enabling economic activities or to restructure the internet in a way that is not possible with the technologies that we have today. Could be the case, right? Clearly, I agree with you. But on the other hand, movement of money does have a problem. If you wanted to send money to someone in India, it's incredibly difficult. You need an account, this, etc. If I wanted to trade with someone in Brazil and buy a piece of thing from there and get it shipped here, I can do it with cryptocurrency in a matter of seconds. So there is benefit to that, but the dark side of that is unregulated. Who knows what I'm buying? And it can be used for drug trafficking. And it is known that a large amount of speculative interest in crypto is done by the drug trade. But on the other hand, people said if there ever was any application for crypto, would have been to finance the defense of Ukraine and against Russia and vice versa. And it should have spiked in enormous value because essentially money in Ukraine became very worthless or very scarce, but it didn't happen. So there's a lot of counter theories right now, and we'll have to see where it plays out. And your speculation is as good as mine, is as good as the next person's, I would say. It's pure speculation. We don't know where it'll end up.
There's a couple of questions from Pradeep. It says, is the government really able to track this crypto transaction, to be able to tax them? The tweet of the finance minister. And of course, the follow-on question is a tongue-in-cheek, like what you said, I think. Can they pay the tax in cryptocurrency? They're taxing it so. And his other question is Satoshi benefiting from his creation? Is he getting some kind of a royalty cut or a take from every transaction of Bitcoin that's happening around the world?
So 3 questions, starting from the back. We don't know anything about Satoshi. So we don't know anything about his benefits or his thing around that. He may have created the first 1 million Bitcoins and be the wealthiest person on the planet right now. And there are some speculations who he is. Some person is actually claiming he is Satoshi Nakamoto. But truly one would believe, or a couple of people are, and there's some anecdotal or inference that he might be, but we don't know. Maybe his biggest source of wealth is by owning large chunks of Bitcoin that he might have mined early on and be a real billionaire. But I think in the world about that is if you start unloading that Bitcoin, you'll probably find it's a market of supply and demand. There won't be enough people buying it probably, and it'll crash down in price. So it is all paper money in some ways because it is back to the dollar as opposed to Bitcoin itself, right? So we don't know around Satoshi and what he creates and who he is. But presumably all these, and that is one of the knocks against cryptocurrency, is all this value initially was created by shady organizations in Russia, in China, in Ukraine, and hackers and geeks in the garages and basement who mine this Bitcoin, and all of a sudden they have 100, 1,000 Bitcoins worth millions and hundreds of millions of dollars in real money. I cannot imagine any government in the world. Let's imagine that it is concentrated in the hands of a few individuals in Russia, China, and otherwise. I cannot imagine the US government be willing to cede $1 trillion in value and market power to individuals and unregulated entities and organizations in other parts of the world. So that's the second part. The third part of it is, how will they know and regulate? Ultimately, you know, I don't know the details. This is speculation, Pradeep, but my thing is there are two folds. Anytime a normal person does a transaction on an institution like Coinbase or others, they report it. They have my tax ID. So the moment you start going through the mainstream, you're going to get hooked. And the second thing is, if you're ever converting money to dollars, unless you're dealing again in the black market, if you're trying to get legitimate money, you will be tracked. If you're trying to get a dollar, so ultimately everybody is trying to become legal, unless you're tracking in the black market world of drug trailers, etc. You're already dealing with illegal activities which are not being tracked. So there's no question of taxation. But the moment you're trying to make it legal, you're going to try and encounter legal, money, which will invoke your traceability. Your anonymity of pseudo-anonymity goes away, and you will have to declare yourself to some entity around that. So those were the questions that I remembered, if you will.
Yeah, I think you answered all of them. Jayant and a few others have similar questions, and they relate to what is the problem being solved. You mentioned about these very smart hackers and others who are solving problems. And what is the cost of mining a Bitcoin, and who bears the cost? And Narayanan wanted you to explain it in a much simpler way as a layman. How can he understand that? And are all the other cryptocurrencies also created like Bitcoin, or is the process different?
Ooh, 3 questions. I forget.
Sorry to move.
No, but that's a good one. So you might have to just nudge me again on those. But in a sense, almost all cryptocurrencies are created similar, but with variants around that. Some of them require proof of work, proof of stake. It gets to be fairly abstract and detailed computer science, but they're all involving cryptographic work on computers to create these digital tokens and assets. And there may be nuances, and frankly, which even I don't understand, but that is sort of the approach one has taken. They're all based on blockchain, which is to create a unique identifier by solving a hard math problem. And that is the core of how Bitcoin and blockchain is mined. And how much does it cost, and why does it cost so much? It really is the amount of computational power to solve the problem. And that problem is called creating a cryptographic hash, and it requires cycles of computer time. Initially, it might have taken 10 minutes to solve the problem, and now it takes a lot more time to solve the problem. And in order, that time translates into energy. And then energy translates into cost, which is why these server farms require lots of computers, which is capital equipment and capital costs. So you have to buy all these servers. And that's why stocks of companies like NVIDIA is going up, because they're creating these gaming chips and cards that are purpose designed for solving cryptographic problems. So you have to spend a lot of money on that. Millions of dollars to create these computer farms. And these farms do only one thing. They're running day and night, day and night, day and night, solving what some would call this useless problem of Bitcoin. And at the end, when they create and solve the problem, they're able to create a cryptographic hash on the blockchain and create a new Bitcoin. And that takes hours and hours and hours and days and days and days and effort. And as a result of that, tons of energy. And that energy equates into the cost. And as long as the price of Bitcoin in the market where you can trade it for $30,000 today exceeds the cost of creating it, people will be incented to do Bitcoin mining. to Chandini's question, if someone tells you, you can set up computers, you're smart enough, go set up computers in your house, here is the algorithm, and you can start mining it, and it'll cost you $10,000, and I can predict you can sell it for $30,000, why would you not do that? You would be a fool, because there's a great way to do that around that, right? So that is the process of creating and mining Bitcoin, if you will. Hopefully that's a simple enough analogy.
Great, thank you. And you had a very elaborate disclaimer at the start of your talk, but K.R. Narayanan still wants you to advise, if he wants to invest $1 lakh rupees, how does he go about buying a Bitcoin? He is in Chennai, India, so Indian context.
So 3 things. I don't know exactly Indian context, but there are crypto wallets. If one Googles, one can find the equivalent, and I'm sure some of the younger generation on the call who are perhaps in India might know. Otherwise, I can do some research and share via email offline, number 1. Number 2, the more tongue-in-cheek, if you want to invest $1 lakh, I would say, I hope you can afford to lose that $1 lakh. So just assume you will lose it and then invest it. That is all I would say. If at the end of it, you feel I lost that $1 lakh and as a result, I really suffer in life, don't do that. Number 3 is, if you were to invest it, you can think about investing it in various different cryptocurrencies. By far, the ones that seem to have held up their price around this is being Bitcoin and Ethereum. There's the majority of investment and activity are happening in those 2. And there are others though that are also rapidly rising, like Solana and other cryptocurrencies around those. So that would be an individual research. If you want to speculate more, you can invest in others in the hope that you will get a 10,000% appreciation. Because something like Solana a few years ago was trading very cheaply, and now it is $100. So you could have made 10,000%. Bitcoin probably will go up only 10x or 20x, not 10,000x, if at all, right? So those are your risk reward calculations, and you need to do your own research into different cryptocurrencies. But I can do some research into how one can buy crypto in India, because apparently it is not illegal. And I choose my word carefully. It is not legal. It is not illegal.
Well, I'll add a bit of advice to Narayanan. I'm sure he already knows. The only thing that can get you wealth much quicker is to become a politician. So no cryptocurrency will match that. So you may want to consider that as a safer option. I think we'll have to end the questions. And before I call our secretary, I thought it'd be interesting to get a perspective from somebody on the call who has been the deputy governor of RBI and the managing director of SBI, how he views it. Kamisangaru, would you care to comment briefly on what you think about this? You'll have to unmute yourself first. You'll have to unmute yourself.
Wonderful, thank you.
Thanks everyone, and it was a very illuminating lecture. My experience in this area is rather limited. Apparently there is a lot of value, and it is a new instrument already in the market for the last 15 years. We need to take some more time, and it will come. It's a question of time when, although the present deputy governor has said it should not be, they will not encourage it. But as and when more and more people begin to own it, and since it is already not declared as not illegal, I think it will begin to expand, and then it will gain some acceptance. But there is a very high risk. This is my perception.
Thank you.
Thank you.
Good. All good things have to come to an end. So in order that we stick to our time, thank you so much, Karthik. It was really, I think you fielded the question with such aplomb. I think you made much more money in cryptocurrency than you're disclosing to us. So thank you for that. May I now call upon our secretary, Mr. Subhash Chandra Bose, to render the vote of thanks, please. Can you unmute yourself? Yeah, thank you. Please go ahead.
Thank you, Subharu. Good evening, everyone. President of FOSWL Hyderabad, Sri Venkateswara Garu, distinguished speaker, Mr. Karthik Hariharan, family and friends of late Sri M.L. Swami, ladies and gentlemen. Thank you all for joining our 161st monthly meeting. This is the 5th meeting in our 14th year, and these 161 meetings we had no break. We have been conducting without any break. We thank the family members of late Sri M.L. Swami for establishing an annual endowment lecture in his name in the month of May. This is a very significant month for all FOSWLians around the world, as Sri Swami is the co-founder and the main motivation for conceiving and establishing FOSWL. We thank Sri T. Somasekhar Rao for the annual logistics sponsorship for the month of May in the name of his mother, great Srimati Sita Mahalakshmi. Thank you, Mrs. Sirisha Bulineni, for joining us from Los Altos, California, USA, and reading the prayer. Thank you, Mr. Pradeep Chand Bulineni of Los Altos, California, USA, for introducing the distinguished speaker. We are particularly happy that Mr. Karthik joined us this evening, as he is the son of the President of FOSWL Adyar Chapter, Dr. T. Hariharan Iyer. The very engrossing talk delivered today by Mr. Karthik Hariharan has introduced us to the rudimentary aspects of this new phenomenon called cryptocurrency, which is still in the realm of the unknown to most of us. This past decade, we are witnessing the rapid changes in technology, especially in the digital field. To generations who are used to physically touching and seeing their money or currency, this virtual money is still a puzzle. Nevertheless, the world is fast moving towards these technologies, and we have no choice but to adopt and adapt. To that end, today's talk by Sri Karthik explained to us in very simple terms the very basics of cryptocurrency. Thank you, Mr. Karthik. We truly appreciate your time. We propose to continue with these Zoom meetings till further notice, though restrictions have been removed by the governments. If you have not already done so, please take the booster dose of the vaccine and diligently continue to follow COVID protocols, however much the situation appears to be returning to normal. Our forthcoming meetings are as follows. Saturday, 18th June, Dr. Prabhu L.N. Pingali, Professor in the Charles H. Dyson School of Applied Economics and Management at Cornell University, founding director of the Tata Cornell Institute for Agriculture and Nutrition, will deliver a talk on why does agriculture remain unremunerative. On Saturday, 20th August 22, Mr. Girish Reddy, formerly with Goldman Sachs on the boards of Cornell and ISB, will deliver a talk on global attraction of US universities. In the month of June, on 18th June 22, Ms. Aditi Halve, PhD student at University of California at Los Angeles, will deliver a talk on museums, exhibitions, and the stories they tell. Good night, ladies and gentlemen, till we meet on the third Saturday of June, the 18th, for our 162nd monthly meeting. Stay home, stay safe. Thank you all.
Thank you, Bosgaru. You see that we have a very diverse range of topics coming up June, July, and August, from museums to agriculture to the US university education system. So do remember, third Saturday of every month at 6:15 Indian Standard Time. The place to be is FOSWL Hyderabad on Zoom. Good night or good day. Thank you again, Karthik.
Pleasure.
Hope you
Thank
can
you,
go back.
everybody.
Hope you can go back to bed and catch up on your sleep.
No, no. Have a great day.
Thank you.
Bye.